Hi guys, today I'm going to show you in details my $200,000 stock portfolio. It's a very different video than usually. There is no music, no fancy editing, no script. It's just me talking raw to the camera, way more honest. It's not made for the algorithm, it's made for you. I will talk to you like I talk to my real life close friends, and I will show you exactly in all honesty and transparency what's inside my portfolio. Let me begin by telling you what I say to my friends when they ask me for investment tips and they want to know my holdings, what should I buy, and so on. You shouldn't copy me. You should have your own way to invest, your own conviction that you know that are tailored to your personality and to the way that you are, not just copy someone else. That's the perfect way to lose money. Clearly, this applies even more to YouTube. You should never copy YouTubers, you shouldn't trust YouTubers, you should think with your own mind. So this is not financial advice, it's just a friend sharing with you his portfolio. Now, my portfolio is very different than any other investor, YouTuber, fund manager. I don't copy anyone, it's just my portfolio. And I was a professional poker player, so I'm comfortable and confident in taking a lot of calculated risk, so I don't need to be very differentiated. I'm like usually my portfolio, there is few positions, very concentrated. At the time of recording, I only have 8 stocks. Before I reveal my position, let me say that lately I'm losing money. There is a lot of red in my portfolio, but before you jump into the comments and write, you're the worst investor ever existed, please consider all the trades that I've done since I started this channel, January 2025. Check it out. I've made 11 trades, 90,000 K in profit. None of these trades I lost money, all 11 are green. Even if I'm currently down $20,700 with my open position, I'm up around 70K on a $140,000 investment. This is a 50% return, while the S&P I think is up around 25-26%. So even with all the mistakes I've done, and I've done a lot of mistakes, I'm still doubling the S&P 500 returns. Please, no judgment, no harsh comment, I'm already losing money. Here is my portfolio. I'm going to show you each one of my holdings, starting from my smallest position up to the biggest. I know many of you just care about one or two specific stocks, specific names, so for your convenience, I'm going to put the timestamp below. Would be much better if you can watch the whole video. However, I understand if you want to jump ahead. Smallest position, Booking Holdings, Booking.com. It's 5.69% of my portfolio. I just made a video about Booking, so if you're interested in the company, check it out. Personally, I'm not super excited with Booking. My initial thesis, investment thesis, was that travel will expand, like the travel industry will grow with growth of the population. People like to travel more and more. Asia is getting richer and they will also travel more. And Booking will profit from this secular trend. And I think this thesis is still valid, is still in play. However, look at the chart. I've entered this position the 7th of April last year, here. Timing the bottom in almost a miraculous way, it never happened to me like that. And I was very excited because in 3 months the stock went up 40%, but since then, just down and down and down, shit. So now we are below my entry price. Revenue is growing like 10%, profits are growing 10%, so the company is actually cheaper now than when I initially bought. At the same time, I could argue that now there is a little bit more risk. For example, there is a new war going on, and especially there is this AI uncertainty. Right now there is this storytelling that we really don't know what will happen to travel and how we will book hotels and accommodation 10 years from now. I'm still holding because I think it's very cheap. However, I wouldn't recommend it to my close friends unless they want something connected to travel or something easy to understand, something that we use. Next, Sanara Medtech. This is a microcap, 170 million market cap. It's 7.8% of my portfolio and I'm down around 21%. The Cell Surgical Medicine, I was just listening to the earnings call 20 minutes ago. Finally, great earnings. The company today is trading up 23%. However, the investment, it's not going the way I want. I opened the position 1 year ago. Since then, in the beginning, was going up. I was up almost 24-25%, and then crashed down. The telehealth part of the business completely failed, 30 million in the garbage. And in November, right here, the worst news, the CEO resigned. This is one of my special talent. I'm really good on buying companies right before the CEO quits. Like, Adriconomics is in, I'm out. And every time that happens, of course, it sucks because the stocks keep going down for at least 6 months. And then if the new CEO is good, we get the turnaround and everything is gonna be fine. In the case of Sanara, we are having like great quarter, very good growth. So I can keep holding. However, I wouldn't really recommend it to my close friends or to people that ask me for investment because it's a very volatile, very risky, it's a microcap. So it's very risky company, very risky investment. You need to be very patient, very relaxed, very stable if you want to invest in a company like that. It is very cheap, but it's also very risky. 8% of my portfolio is Microsoft. I bought some weeks ago and I'm already up $1,000. 7%. I'm not in love with Microsoft, however, I think it's currently a very good deal. If we see forecaster, we can see that there is a disconnection between the price that is going down while the income and the sales are keep going up. If you see this kind of divergence, it's quite rare. On Microsoft, it happened once in 2022 and probably not at these extremes, and again today. So I think it's a good deal. My hope is that Microsoft keeps going up while Meta keeps going down, and then I will switch. If you're interested in this mega cap, I suggest you to watch this video right here. It's a video of last week where I analyzed 23 big YouTubers and what's their favorite Magnificent 7 right now. Next, 9%, around $19,000 in cash. I don't know if you have noticed, but from the last time I shared my portfolio, I've closed my Molina healthcare position in profit. I closed in the hype following the earnings. So I could have made more. I didn't close 200, I didn't close on top, but still, I made $2,000-3,000. I closed it because, to be honest, this is really out of my circle of competence. I don't understand anything of the US insurance system. I just bought it based on valuation because it was so cheap that, I mean, yeah, it was too much. It was really crazy cheap, and the sentiment was very negative. Now the sentiment is already a little bit more positive, and again, I don't know anything about insurance, so I'm happy I took this 15% profit, $2,000 or something. It's fine. My guess, purely based on valuation, is that in the coming years the health insurance will still trade up because it's still extremely cheap. However, I don't know if whatever the US government will change a law and everything will change. Again, I don't understand it. Fuck it. Bye-bye. So my suggestion here for my friends is don't invest in a business that you don't understand. Next, Novo Nordisk, 9.4% of my portfolio. I'm basically even. This was my first video that crossed 10,000 views, and many people still ask me an update about Novo. So here it is. I bought Novo here and yeah, great start, crossing $60. Everybody was excited. Oh, Adri, you are a genius, and blah, down back into the abyss. Finally, now we are up almost at my entry price. The big crash was because the US government kept the price of GLP-1 drugs, especially Wegovy, at $150, so this was very bad. However, the Wegovy pill launch went incredible, like the best and the biggest launch ever in the history of pharma. Never so many people love a pill and so on. It is also much more effective than Lilly. So there is a lot of positive, and I believe the worst part for Novo is behind us. If we check forecaster, we can see that Novo Nordisk is actually very cheap. There is a big disconnection between the share price and the underlying fundamentals. We can see here that the net income is still going up. This is maybe too optimistic, but let's say it's similar to last year, or maybe even a little bit lower. However, there is a big disconnection between the share price that keeps going down and the fundamentals that keep going up. As you can see, during the whole history of the company, the share price was always over this net income line, and now in the last couple of years it reversed, it went much lower. Given that the revenue this year is going down, and given this bad news, I've revisited down my fair value to around $70. So I'm keep holding Novo because I think after 2 years of bad news, check it out, like 2 years just down. I think the worst part is finally behind us. However, I'm not really in love with Big Pharma. Ethically, it gives me some issue, and now the market is full of bargains. So I might switch from a company like Novo to Mercado Libre, Lululemon, Zeta, Celsius. You know, there are so many interesting companies out there. Birkenstock, let's not forget Birkenstock, one of my favorite sandals. Next, PayPal. This is by far my greatest regret this year. 10.7% of my portfolio, down 21% or $6,000. This is painful. I bought right here at $57 thinking this resistance will hold. Well, it didn't. 1 week later, CEO resign. Adriconomics is in, I'm out. Not only that, I really don't like the new CEO. It doesn't give me a good feeling, you know, I don't know, no. I really have issue taking a loss, especially in a company trading at such a low valuation. However, it's a shit company. It's an antique business model, it's not really working. Competition is super aggressive, much better. So, I don't know, I really don't know what to do with this one. I might wait a bit longer, hope for the miracle bounce just based on the low valuation, like the valuation is really too low. However, I might also take a loss on this one. It would be the first loss that I take since I start this channel, that I close a position to a loss. I would really like to avoid that, but it's PayPal, I would say. Over the long run, I really think that I can squeeze enough value out of what they have to make it actually a decent investment. Like, I don't think people that buy now will lose money in the next 3 or 5 years. However, I wouldn't really suggest it to my friends. And yeah, I don't feel very comfortable holding it myself. So, Adri, what would you recommend? Well, I'm way more bullish on my top 3 holdings. Adobe, 11% of my portfolio, 11.5%, down $3,700 or 13%. Adobe is getting destroyed by the AI narrative that AI will change everything for software, and Adobe keeps going down and down and down. I entered here at $180. Do you want to guess what happened after I bought? After 20 years in charge, the CEO, Shantanu Narayan, I think is called. 20 years in charge, Adriconomics is in, I'm out, I quit. In the middle of the AI revolution, he quit. So is it bad luck? Is it me? What's going on? 8 companies in 3, the CEO quit 1 month after I bought. So even if there are risks, I don't think AI will disrupt Adobe. Adobe is like too strong of a company, too big of a company. Every designer in the world, one way or another, is forced to use Adobe. And the valuation, like, mamma mia, the valuation is really cheap. It's like incredibly cheap. As we can see in Forecaster, Adobe is completely disconnected by the underlying fundamentals. As you can see during the whole history, I mean in the last 10 years, you see the share price really follow closely the earnings, as is normal. But from 2021, of course, here earnings slow down. We get a, let's say, side phase with the share price going up and down, but more or less in a sideline. And now earnings are picking back up, but the share price went down. So we never had such a big disconnection between the share price and the earnings going up. Please give a try to Forecaster. It's the official sponsor of this channel. There are a lot of different tabs and all very useful, like seasonality, patterns, overbought and oversold. We see Adobe is as neutral right now. Of course, all the fundamentals. And of course, there is also the Forecaster AI agent with a lot of functionality. My favorite are, of course, the Business Explained Simple, but I don't need it for Adobe, and the Quality Scorecard, where we can see Adobe is a 7 out of 10 quality. So give it a try to Forecaster. Please remember to use the discount coupon code ADRI. So the downside, I think, here is limited. The upside is big, of course. The new CEO brings extra uncertainty, more risk, so it brings my fair value down. I've already I have a fair value around $400, but I bought at $280, so I see a big upside. This I will recommend to my friends, especially the one that don't think AI will change everything tomorrow. Of course, AI will change everything in 30 years, but I don't think Adobe will go anywhere in the next 5 or 10 years. My second biggest position in terms of size is Hims & Hers Health. They just released earnings and I don't want to go around it or paraphrase it. Really shit earnings. Money wasted in the Novo lawsuits, millions and millions of Chinese know-how GLP-1 thrown in the garbage. What else? Revenue, US revenue declining 9%, like horrible, really horrible earnings. However, I'm positive this company is a big disruptor. Several reasons. First, because I imagine in the future, 5 years, 10 years from now, we will have way more telehealth than today. Personalized medicine, I think, is a big trend. In the future, we will have much more personalized medicine. Who's the sector leader? Hims. Peptides. Peptides, again, the new trend. This will, I think, will increase a lot in the coming couple of years. Who's the leader in peptides? Hims. So there is so much tailwind for Hims that I think it will grow a lot. Far from being a perfect company, but this is a company that when my friends ask, I tell, okay, check it out because this might go really parabolic. As soon as the storytelling change and peptides will be at the center of the news or customized, personalized medicines, I think Hims will go back to $60, and if it breaks this resistance, I think it will go to 100 or more quite quickly. Lastly, by far my favorite company right now, Duolingo, 25% of my portfolio. I'm down $7,000 or 12%. For me, it's really a no-brainer. Personally, I'm addicted to the app. I think the app is working, it's great. It's improving very quickly and is getting better and better. And with AI, the learning experience will get incredible. So I think it's really it's one of the most misunderstood stocks right now. Investors really don't get it. Just as my personal example is anecdotal, of course, but I've paid 12 months in December. I've already decided that I'm going to renovate and pay 12 months more next December. And I think a lot of people like me, the value that it gives, it's too much for, it's really not that expensive. Overall, a big part of my conviction is connected to the management, especially Louise Van Aan. I think is very, very good, very competent. He's one of the best CEO, honestly. I heard a lot of conference call. When there is the Duolingo conference call, I'm always impressed of the quality of the management, and I think he's really thinking long term. Again, I'm not saying we are going there, but it is possible that 20 years from now, the kids and in general the humans learn everything with Duolingo. It's not, and will not be Duolingo, will probably be something like different name, like Duo Learning or something, but I think it's something that might happen. My average entry price is $122, so yes, I'm down. How much? Around 12%. I've put 60K right now into Duolingo. I have 500 shares, and I'm down $8,000. This is a company I honestly can't have enough. I've already recommended to several friends. Of course, there is no guarantee, and it might keep going down. But if it does, unless the situation change, I think I will keep buying. Like, I already have 25% of my portfolio in Duolingo. I might have 30 or even 40% in really extreme cases. So the lower it goes, the more I buy, because I'm confident that in 2-3 years it will be much higher. Let's see. If you haven't seen my video about Duolingo where more than 20 YouTubers give their opinion about the stock, there are bulls and bears, it's mixed, it's a neutral video. Anyway, very cool. If you're interested in the company, give it a look to this video right here. I hope you enjoyed this portfolio review. It's a different video. Let me know if I should do a video like this where I just go through my portfolio every month. Thank you for watching until the end. I don't think many of you arrive at this point. If you did, you are the best. See you next week. Peace out.